Good morning. I'm Mike Baker, the managing partner of Dent Moses. This is our latest installment on the Paycheck Protection Loan. And as I always like to say, when we have one of these, we're going to give you the information that's current as of today. It's 10 o'clock on Thursday, May 28th. And by this afternoon, it may have changed, but we'll tell you what we know now. I'm joined today by Nicole Reed. Nicole's with Capital Solutions. She's been on several of our calls, a longtime SBA lender. Working with banks through this process has been an invaluable source of information. And also one of my partners, James Moody, he's done a lot of research into the program itself and the forgiveness. Just an overview of our agenda today. We've got about 25 or 30 minutes of material. We're going to go through that. And as we have in the past, then we'll open it up for your questions. So I think we'll have plenty of time to cover your questions. If we don't, and we run out of time, we'll try and respond back to you. Nicole, I'd like to start with you. Can you just give us an update on the program and also just whatever else you're seeing out there?
Sure. It's been 8 weeks since the first round of PPP loans was made. To date, over 4.4 million loans have been funded and processed, which is a tremendous number, totaling $511 billion. There is still over $100 billion available for new applications to come through, although those have really slowed to a trickle. So I think most of the demand appears to have been met, although there are still a few coming through. On May 16th, SBA issued an 11-page forgiveness application. And then about a week later, they issued additional comments to further clarify what that forgiveness application would look like. And since now we are at that 8-week mark, the first forgiveness applications are being compiled and reviewed. And I think a few have actually been submitted and processed through to SBA. So that's where we are today. The process requires the application to the borrower to complete the application and submit it to the bank. So the bank's going to review all the information from the borrower. The bank has, I believe, 60 days to decide on whether or not to make a recommendation to SBA for the forgiveness and in what amount. And then SBA, I think, has another 90 days past that to respond. So it's once the borrower gets their paperwork together and makes that application, it's going to be several months before they'll receive that forgiveness. In the meantime, though, their loan payments are deferred for 6 months and the interest rate is at 1%. So, you don't have to scramble to get it done, but the sooner you get it done, the sooner you'll get your forgiveness. The basic parameters of the forgiveness have not changed. It still remains 75% of the money should have been used for payroll and 25% for other eligible purposes, although that's an area that we may see some relief on. There's been a lot of discussion in the industry, and we're hopeful that those rules may change. So some borrowers may wait to submit that forgiveness. They may have to weigh their options. You may want to wait to submit to see if the rules change and loosen up for you. So unfortunately, there still remains a little bit of confusion and some frustration about the complexity of the process. And hopefully this webinar today will help the borrowers with many of those questions and concerns. The only other real update recently has been in terms of auditing these applications for eligibility. SBA said they'll audit those loans over 2 million. And then the ones below 2 million will be randomly audited, or I guess if they're flagged as needed. And considering there are 4.4 million loans already out there in the system, I don't know how that will go. And I think it's up to a 6-year period for that. So that's really all the changes we have today. And we're watching the Treasury to see if any, and SBA to see if any more guidance comes out. As you all know, you can go on to the U.S. Treasury website and directly download all the frequently asked questions and all the rules, the forgiveness application package, whatnot. You can see that directly in the update to that site.
Nicole, on the forgiveness, unless you were finishing your 8 weeks up and all of your loan was forgiven, there really wouldn't be any reason to submit it now. As you mentioned, you'd probably want to wait. With
the way this program has evolved, which is a good thing. I mean, Congress hurried to get the program out, and to have SBA, get the funds in people's hands as quickly as possible. And of course, when you hurry a complicated process like this, there's going to be some confusion. And I feel like they are listening to small businesses, and they are listening to CPAs and the industry in general, and they're trying to make adjustments that are reasonable and make sense to them. So with this forgiveness package only being available to us over the last week or two, they really haven't had time to finesse and evaluate all of the criticisms and concerns, but I think they'll get there.
All right, thank you. We're going to talk a little bit about the specifics that were issued in the middle of May. And by way of an introduction, one thing I want to mention, Nicole mentioned additional legislation. Well, right now, there's a bill going through the House to extend the forgiveness period from 8 weeks to 24 weeks. And also scrap the 25% requirement. And that's really largely, I think, a result of the fact of people have contacted their legislators and things have not really started up as fast as people would like, particularly in the hospitality industry. They're very limited as to what they can do. There's a similar bill going through the Senate for a 16-week forgiveness period. They are doing a process on that bill called hotlining, where they actually call all the senators' office and check on their position on this. I think it's very likely that whether it's 16 weeks, 24 weeks, or they do what they typically do and split the difference and do 20 weeks, it's probably very likely we're going to get some relief in that area. The House is voting on that bill today, and the Senate, I don't know what their schedule is since they're still in recess, but I think that's probably likely to be an upcoming change. James, you want to start in and talk about the forgiveness period and some of the other changes?
Sure, I will. And like Mike said, all of this is subject to change, but this is at least the way the new forgiveness application was written a couple of weeks ago. So this 8-week, or maybe last week even, this 8-week period starts the day that the funds were deposited into your account. That hasn't really changed, except they did add an alternative 8-week period for payroll purposes. So this alternative period is not for rents or mortgage interest or utilities. It's only for payroll. I'm not 100% sure if that payroll includes health insurance and retirement plan contributions in the alternative period or the normal 8-week period. But at least for payroll costs, the alternative payroll period that you can elect is a 56-day or 8-week cycle that begins on the first pay period after you receive the money. So if you receive the money on a Friday and your next pay cycle starts on the next Monday, you could start your 8-week period on that next Monday, and it would run for 8 weeks beginning on that Monday. That option is available if you pay weekly or bi-weekly. That option is not available if you pay monthly or semi-monthly or some other basis other than weekly or bi-weekly. So the intent is just to get your 8 weeks to line up with the timing of your normal pay periods. Now, under both the normal 8 weeks and the alternative 8 weeks for payroll, there was a good change in the way they wrote these rules with respect to the terms incurred and paid. That was a big issue we were worried about because you can't incur a bill and pay a bill at the exact same time, the way the law was originally written. And so they interpreted this to mean it either needs to be paid during the 8 weeks or the alternative 8 weeks for payroll, or incurred during the 8 weeks or the alternative period. So it's really a paid or incurred. If it was paid during the 8 weeks, it counts because it was paid. If it was incurred during the 8 weeks, it counts as long as it's paid for payroll, as long as it's paid the first regular pay date after the 8 weeks is over, which might be week 9 or week 10, or if you pay monthly, it could even be week 11. So you're going to look at the actual days on the calendar. So if your 8 weeks ends on June the 10th, for example, and you pay it the next payroll on June the 15th, then all the pay that was earned up until June the 10th that's paid on June 15th counts, even though that was paid in the next pay period after the 8 weeks was over. So that's really good news. That's good news for payroll. That's also good news with some of your other expenses. Some of your rents might be paid in arrears. Your utilities are usually paid in arrears. Mortgage interest may or may not be paid in arrears. But if you're paying it after the 8 weeks is over, but it was incurred during the 8 weeks, you will prorate whatever was paid, and that will be counted as eligible. So that's not just payroll, it's for the other types of expenses also. We're not really sure how far in advance you could prepay something, or if you could prepay something. For example, mortgage interest, they said you can't pay principal, or principal doesn't count, and prepayments of interest doesn't count. They have not said rent paid in advance doesn't count. They have not said utilities paid in advance doesn't count. I think the safest approach is if you've been billed for it from your vendor and you pay it during the 8 weeks, that's probably safe. If you're just paying expenses that are several months in advance when you haven't really received the bill for it, I just don't know if that's really a good idea. It might work because, I mean, it says if you paid it, then you're fine. But it seems better to, if you want to pay something early, if you want to pay your landlord for a July rent on June the 16th, ask them to go ahead and send you a bill for it. Again, I'm not 100% certain that works, but I would feel better about it if you had a bill for it already in your hands. Now, we've had this question come up about retirement plan expenses. What happens if you don't make your retirement plan payment every pay period? What happens if you make it quarterly or annually? We just don't know the answer to that question. It's definitely incurred during the 8 weeks, but if your normal pay date for that is 8 months down the road, the beginning of next year when you make your annual contribution, I'm just not sure if that's their intent, if that should count. Likewise, if you paid a 2019 match or profit sharing payment during this 8 week period, it was definitely paid during the 8 week period. I'm just not so sure that their intent is for that to count, since it's a whole year's worth of match and not just 8 weeks. Hopefully they'll issue some guidance on that. Right now, the only rule we have is that if it was paid during the 8 weeks, it counts, or if it was incurred during the 8 weeks and paid, pretty soon after the 8 weeks is over in the normal course of business, then it counts. So let's talk about more about the payroll calculations. We do believe that in all circumstances, even if they extend this to 16 weeks or 24 weeks, at least as of right now, we still think it's likely you'll be limited to $15,385 per person. I don't think they're going to allow you to have $30,000 per person if they go to 16 weeks. It's possible they could change that, but it seems likely that each employee will still be limited to $15,385. That's the way they wrote the application. So even if you have 8.5 weeks that actually get paid or incurred, or if you have 9 or maybe 10 weeks that get paid or incurred, it seems like they're still limiting each employee to $15,385. And it looks like that's over the total of the eligible period. It's not a per pay period analysis. Bonuses will count. If you pay someone $12,000 of regular wages during this period and $2,000 of a bonus, and their total is $14,000, it looks like that's less than $15,385, and the entire amount is then eligible. We mentioned on the last call that employer Social Security and employer Medicare doesn't count. That's still the case. 401k, the employer portion or the match, that does count. It's cleanest if that's paid each pay period or each month. The annual pay cycle on that is not quite as clear. Health insurance benefit counts. We still believe that's health, dental, and vision, the employer portion, not the employee portion. but it doesn't appear there's any other benefits, long-term disability or life benefit or any of those other supplemental benefits that aren't really health, dental, or vision. They issued, I'd say in a roundabout way, some clarification about partners and S Corp owners, and is it just their wage or do they get to count benefits also? You know, we mentioned the last time that self-employed individuals, it's limited to $100,000 of comp or $15,385 over 8 weeks, but there's no ability for self-employed individuals to take any health contributions or retirement plan contributions. Based on the interim final rule that they published on Friday, I read it to say that they've extended that self-employed rule to partners in a partnership. I believe that would be LLC members of an LLC also. And so my current interpretation is if you're an S Corp or a C Corp owner, your benefits are eligible just like other employees. But if you're a partner in a partnership or you're self-employed, it's just $15,385 with no 401k contributions and with no health insurance benefits being eligible in addition to that. Now they did come out with some clarification about, you know, what about specifically towards the business owner? What if the business owner raised his pay during this 8-week period or provided him or herself additional benefits during this 8-week period? And the limitation seems pretty clear to me. Whatever you did in 2019, as long as you do that in 2020 during this 8-week period, you're fine. But if you didn't pay yourself a salary in 2019 and you started during this 8-week period, at least for the business owner, then that's not eligible compensation during the 8-week period. And I believe the benefits, if you're an S Corp owner or a C Corp owner, the benefits would be the same. If you weren't on the health insurance plan and didn't provide yourself that benefit in 2019, you can't start doing it during the 8-week period in 2020. I believe that extends to not just the business owner, but members of his or her family. It does not specifically say that, but I think you would want to be a little cautious when dealing with family members and treat them the exact same way that you did in 2019 and make sure everything is really justified from a business standpoint. So you're not just raising the comp or the benefits for the family members just to take advantage of this PPP money. You know, the best advice that Mike and I talked about a lot is, you know, do what you would ordinarily do. And if you would ordinarily pay bonuses, that's okay. If your industry is paying hazard pay to employees that are out dealing with the public right now, you know, $2 an hour extra or a weekly or monthly bonus just for hazard pay situations, that sounds okay. They specifically said bonuses and hazard pay are eligible as long as that employee stays under the $15,385 limit for the period. We're going to shift over for just a second and talk about rent and utilities. There was some really good news that came in with this application, and again with the interim final rule that kind of explained it, that rent is not just on real property. It's not just your building. Personal property qualifies as well. So if you rent vehicles or you rent equipment, most people have copy machines on some kind of a leasing arrangement. That counts. So that's really good news. I would say if it's a finance style lease where it could be a loan or it could be a lease, I would just look at the document. If it's written up as a leasing instrument, then I would consider that a lease that's eligible. If it's written up as a financing or a loan instrument, then only the interest counts when we get down to the mortgage interest and the non-mortgage interest section in just a minute. As of right now, rents paid to related parties are still, as far as we know, eligible. They have not said that they're not eligible. I think they should be eligible. Even if they make any statement about it, I think they will say that it's eligible. But you really need to have a written agreement dated. You need to follow normal business practices with respect to any related party transactions, including family members on payroll, including related party rents. Your rent agreement must have been in place by February 15th, 2020. If you've been paying rent for years or months and months at the same amount, and it's related parties, so there's just nothing documenting it, I think it's best to document that. But a handshake agreement, might count as an agreement, but you're probably better off documenting that agreement has been in place for a while. Utilities, we still believe the same list of utilities that we talked about a few weeks ago: telephone, internet, power, gas, water. We believe cell phone counts under telephone. There's this other category we talked about before called transportation. I would really like for them to clarify what that means, but there's certain municipalities that have a transportation billed as a utility, and we're not really familiar with that here. I don't think that counts as gas in your vehicle or insurance on your truck or truck depreciation or anything like that. But we really still don't have clear guidance on that. And again, all of your rent and utilities are subject to that paid and incurred, or paid or incurred. So if you pay it during the 8 weeks, it counts. Even if it was for a March bill, if it got paid in the 8 weeks, it counts. Or if it was incurred during the 8 weeks, but paid after the 8 weeks is over, it counts as well. So that applies to rent and utilities also. I'm going to turn things back over to Mike to talk about mortgage and non-mortgage interest.
Yeah, in terms of mortgage and non-mortgage interest, we did get some guidance on this and some clarification. They use the term mortgage, which is unusual in that we understand that applies to real property, but not personal property. But we now understand that mortgage interest on, for example, a building would qualify, and also mortgage interest on an equipment, a piece of equipment or a vehicle. Now, as James mentioned, if it's a financing style lease and treated as a capital lease, you're probably better off deducting the lease payments, in that that is going to result in a higher number than simply taking the interest. And as he already mentioned, you cannot prepay those payments. We're going to shift over a little bit and talk about, camera went off for a second, talk about headcount, specifically the full-time equivalent calculation. We were thrown a little bit of a curveball on this, and that everyone had been thinking that the SBA and the Treasury would follow the Affordable Care Act definition and use 30 hours as a full-time employee. That didn't happen. SBA issued guidance, a full-time employee is considered 40 hours. So I've been asked the question, well, what happens in a physician's office or a dentist's office where typically they may have less than 40 hours scheduled? Well, the best thing I can say, absent any guidance, is those people that work full-time, all the scheduled hours, let's say they're 35 or 37 hours, maybe you count them as a full-time equivalent, and then calculate the rest of employees if they're part-time based on the 40-hour rule. Now you have two choices. You can calculate the part-time equivalents based on 40 hours, or there's a simplified method where any part-time employee counts as half an employee, so 0.5. Now, I've had people ask, which one should I use? Well, you're comparing, if you use the same calculation, the beginning and the end, you probably are going to wind up with the same result. But there could be some instances of, if you had employees, for example, you had several that work maybe 10 hours a week, and under the simplified method, those would count as half of FTE, as opposed to a pro rata share of 25% of 40 hours, you might come out ahead. So you might take a look at that and run it both ways. The other question we've had a lot is, on the original loan application, there was a question on the number of jobs or the number of employees. Is that relevant, and are you held to that number? Our understanding is no. There's also on the application, I can't remember what they call it, James, but another term in terms of jobs or employees. The FTEs are calculated on Schedule A, and I don't even think that schedule is submitted with the application. So what happens if you have furloughed people? Well, there's a safe harbor that you have until June 30th to restore that FTE count. So let's say, for example, things slow down, you furloughed a couple of people. Well, on June 30th, if you bring them back and have them in place, you'll be able to restore that count. Now, it's a snapshot in time, so it's on June 30th. It's not that you have to have them back for a week or a month or any period of time. So June 30th is your safe harbor to cure any deficiency you have in the FTE count. Now, we talked earlier about them extending the forgiveness period to 16 weeks or 24 weeks. I don't have a clue what's going to happen with that, but my assumption would be they would retain the June 30th date for those who wanted to use the original time period, and then they would maybe do something else on the date to calculate your FTE safe harbor if it's extended out beyond that. But we're not sure, and we'll have to wait and see if that's an issue. This has been a big issue for people in the hospitality industry, restaurants in particular. They have not been able to return to work like many businesses have, and they're limited to 50% capacity. So it's almost impossible for them to get their head count up. And will they be able to return to a full schedule by June 30th? We don't know that. And hopefully if they extend the forgiveness period out, that's going to help them a lot. Now, there are a couple of instances where you're not penalized and you have sort of a buy on the FTEs. And that is in the instance of involuntary termination. And that would be where you extend an offer to an employee that's been furloughed to return to work, and they reject that offer. That would be one instance. The second instance would be terminating someone for cause. And the third instance would be, let's say you have someone who is taking care of children and they have requested a reduction in their hours. Maybe they say, well, I was working 40, I'm taking care of kids, I can only work 20 hours. On those three instances, you wouldn't be penalized for a reduction in FTEs. Now, I think it's very important to point out, we have had some discussions with clients where under that first instance, they've asked people to return to work for whatever reason they have not. And that is an involuntary termination. Now, it says written offer to return to work. And on that and these other instances, I would be very careful and have as much documentation as I could. Even if I called them and extended that offer to them orally, I would probably send a certified letter to show that I had notified them in writing and extended their job offer for them to return. So that's something to keep in mind. If someone has requesting a reduction in hours, you might ask them to send you an email documenting what they want. And finally, if you've terminated somebody for cause, just have documentation for that. I think you're going to have to be prepared to show that if there's some question. So let's give a sort of a simple example. There's a lot of steps to this FTE reduction, and this is an instance of where some of the other items have been softened up, but I haven't seen anything really where they're going to relax some of these requirements on the FTE counts. Date may get extended out. Let's say, for example, you have a paycheck protection loan of $100,000. Your employees at February 15th of 2020, your FTEs, you calculate, and it's 10. And whatever mechanism you use to calculate it again, say you get to the June 30th safe harbor and you only have 9 employees. So your quotient would be 9 divided by 10 or 90%. Now, that quotient is applied to eligible expenses. And let's say you take all of your payroll costs, the other expenses that James has outlined, the rent, utilities, interest, all of those things, and those total eligible expenses are $115,000. Now that quotient, that 90%, is applied to the eligible expenses, not the loan amount. So if I have $115,000 of eligible expenses times 9 divided by 10 or 90%, that's $103,000 or $104,000, which is in excess of your $100,000 loan amount, which means your entire loan would be forgiven. So just keep that in mind. Finally, we're going to talk about wages. We've talked about this before. You can't reduce anybody's wages by more than 25%. Well, you can reduce them, but if you do, there's a reduction in your PPP loan forgiveness. Now, one of the things that they did allow you to do is you have a safe harbor to restore the wages. So let's say, for example, you had an employee who was making $75,000 a year. On February 15th of 2020, all of the COVID-19 happens. You reduce their wages to $52,000 or $1,000 a week, which would be more than a 25% reduction. Now, by June 30th, if you restore their wages to $75,000, you would incur no penalty due to a wage reduction. And one of the things to clarify is, again, this is a point in time. This doesn't mean you have to pay all their back pay and catch them back up over that period of time to what they were making. It simply means you've restored their wages. Now, James, you may have seen something, but I haven't seen something of, do you have to show physically that you restored their wages via a pay period, that you actually paid them? That's probably a good idea. Absent that, I would assume that you could notify them, but probably the best thing to do is, at least for some period of time approaching June 30th, you restore their wages and you pay them that restored amount back to where they were on February 15th. Let's switch over to documentation, because I think this is going to be very important. The application has a detailed list of documentation. It's really what you would expect. It's going to be payroll records from third-party payroll services or internal payroll reports, federal and state payroll tax forms, receipts, say for utilities, canceled checks, bills. For a mortgage, you'd want copies of maybe the loan amortization schedule, all of those things. James has already talked about lease agreements. And we're mentioning all this because I think now is the time to round up that documentation as you go and make sure that you're collecting it in one place. One of the things may be, if they extend the forgiveness to 16 or 24 weeks, you may have enough payroll to meet the forgiveness under some alternative system and not have to deal with the other 25% of the expenses they are now, the rent, utilities, and so forth. But also at this time, we're just not sure. I think now is the time to run a projection. While we're dealing with the 8 weeks now and it may be extended, it's probably a good idea to check and see where you are. If you have questions, you can contact one of us at Dent Moses. We'll be glad to help you with that. James alluded to this earlier. Let's say I do my calculation, I'm short. What can I do? Well, some of these other expenses that we're not sure of, you can certainly pay some of those and hope that they may be forgiven. I think within the next few days, we're going to know on this legislation, although we may not know the final rules to that. So we're just going to have to take a look at what expenses we have and what we can pay. Now, one of the things that we've got a template. We've held off doing an update on that because of the fact of these changes. So we're going to wait a little while. We'll put that out, probably send it out via Constant Contact, and also put it on our website. One of the things that I want to finish this section up with that James alluded to, I've talked to a lot of people about this, and people are really doing some creative thinking, and some of that creative thinking is what I would say is in a bad way. Nicole mentioned earlier, they're going to look at all the loans over 2 million, and they're going to possibly do samples and review the ones under. I've heard people talk about, if their FTE count is low, possibly hiring spouses who maybe don't have business experience and aren't going to work in the business, relatives, all of those kinds of things. I really can't emphasize enough that I would stick with what would be a normal business practice. I think that if you are reviewed and you've done something like that, you better be prepared to substantiate the fact that whoever you've hired has the adequate experience to perform the task if they are in fact working. But I've talked to people who, based on where they are now, they don't really want to bring some of their employees back, and that they feel like they're not going to be able to keep them on the payroll. Restaurants, for example. I think you just have to examine what's a good business decision and go by that. Too many people, in my view, are letting the whole forgiveness scheme color their thoughts, and I would urge you to stay away from that. Next, let's talk about taxation. The last webinar we did, we reported on the fact that the IRS had issued guidance and said that your expenses that were used for forgiveness could not also be used to reduce your taxable income. Well, Congress stepped in, and a number of senators and congressmen and women have said that that was not their intent. There's been a bill introduced in the Senate by Senator Grassley, who is, and one other Democratic senator on the committee, to change that. It's called the Small Business Expense Protection Act. It was introduced on the 5th or 6th of May. And this would add a provision to the CARES Act, which would overrule what the IRS is saying, which is basically the expenses you use for forgiveness would also be allowed as a deduction against your taxable income. There seems to be a lot of support for that. I don't think that's quite as far along as the other bill on stretching out the forgiveness, but we'll see. I suspect it's going to have a lot of bipartisan support. James, I don't know if you have any other items on current news or developments that we need to report on.
No, I think you covered it. You know, we're expecting that that bill on the Small Business Expense Protection Act that will allow you to deduct the expenses and, in essence, make this non-taxable income. We talked about the extensions to maybe 16 weeks or 24 weeks. They're not giving any more money with that. So they're just giving you more time to spend it. We talked about how they might change that 75%, 25% rule. You know, as it was, when one person asked a question about that, you know, as it was written, it was really, you must use 25%, or you can't use more than 25% on non-payroll costs. Well, they shifted the mindset a little bit on this application and really focused more on the 75% for payroll. But you can use more than 75% for payroll. You could use 90% on payroll and 10% on other items. You know, if they give you 16 weeks to spend this money, you might be able to spend it all with just using payroll, and you don't have to worry about getting documentation on rents and utilities if your payroll covers it. So that's out there. We talked about that. If you're under $2 million, the safe harbor, where you made your statement of need or necessity in good faith. I think that's everything out there right now, at least that I'm aware of.
Nicole, is there anything you'd like to add before we switch over to Q&A?
No, I think y'all have really covered it. I mean, the basic message that we all need to get is that these rules may change, and likely in the small business owner's favor. So I'm looking forward to seeing how some of that comes through out of Congress shortly.
All
right, thanks. Let's look and see. I see we have some questions in the box here.
Right.
Yeah, I'll cover something that have already been answered just so we can share those with the whole group. There was one question about 75% for payroll, or is it 25% of rent utility? So more than 75% can go to payroll. That's correct. More than 75% can go to payroll. But as of right now, no more than 25% can go to non-payroll. That might change. That they might relieve those percentages. Let's see. There was one good question about if your FTEs are higher in the measurement period during the 8-week period, does the June 30th FTE really matter? And that's correct. It does not really matter if your 8-week period of FTEs is at least higher than the base measurement period, or I believe they call it the reference period.
Right.
don't really know what happens if they extend this to 16 weeks. I mean, what if during the first 8 weeks you were there, but you ran out of PPP money and your business isn't fully opened yet? I mean, sure, I have to believe they'll be fair to businesses that spent their PPP money in the 8 weeks and then had to downsize if they're still not open. I have to believe they'll be fair in those situations.
Okay, we have a question here. How does the wage reduction apply to commission-only employees? I think the answer to that, James, you and I have talked about this, is that it would be viewed as their as their average over the period of time. So I think that if you have commission-only employees, I've seen people restructure some commissions to meet the wage reduction, but I don't think you would be penalized for that, would you, James?
No, I think what you're going to want to do, if I were looking at commission employees, I would look through this page 7 of the application, where it actually walks through the mechanics of that, how that calculation works. I do think you're going to want to make sure that they're paid at least the same during that 8-week period as they were in the quarter before. And if their sales don't justify it, you might have to pay them a little bit extra, use this PPP money to pay them extra so that they don't go below that 75% mark. But it's walks through the step-by-step how you look at each employee for that 75% purpose.
I have another question here. What payroll taxes can be paid with a PPP loan? And the answer is none. The only thing I'm aware of is the SUI, but none of the employer taxes qualify.
So we had one question about submitting a forgiveness application at this time. If your 8 weeks is over, right now or in the coming days. I mean, the first ones that I think would actually have the 8 weeks ends might be in a few days from now. I don't know that I would submit it right now. I don't know that most of the banks are really ready. A lot of them are going to do just like the application, and they'll have their own platforms. They'll have their own templates. The rules are still changing. And so I would hate for you to have to do it 3 or 4 times and your bank's learning. That being said, if you got a loan for $100,000 and for whatever reason you spent $200,000 on clearly eligible expenses and you're really not worried about it, then I wouldn't feel so bad about being one of the first ones to submit it. But as of right now, I wouldn't. First wait till your 8 weeks is completely over. Then wait till your bank is ready, and I don't know that they're really ready yet. Even if you had this filled out, I just don't know if they're ready yet. And then I would at least wait another week from today to just see what legislatively changes. Nicole, you want to chime in on that?
No, I mean, I agree. For those people who absolutely will get 100% forgiveness during this 8-week period based on the existing rules that are out there today, there's really nothing to be gained by waiting longer if you are absolutely sure you'll get all of the forgiveness that you're seeking. But your bank probably is not ready to review the application. There's certain certifications and requirements that SBA's put on the lenders that the lenders are still reading and studying, and they're trying to figure out how they're going to accept these applications, resources and manpower to review. So I would probably hold on to it for a couple of weeks at least.
So had one question about what if your payroll doesn't meet 75%, that 75% test, and it does not invalidate your forgiveness completely. It just reduces the amount that's eligible for forgiveness based on the 75%. So on page 3 of the application, it walks through all the mechanics, and towards the very bottom, line 10 shows how that 75% is going to come in. So if your loan was for $120,000, but you spent $75,000 on payroll, then the maximum forgiveness will then be $100,000. That's $75,000 on payroll, 75% of $100,000. So you would have lost some expenses eligible for forgiveness, but not the entire amount.
Okay, there's a question here on the unemployment taxes. And again, the only thing that qualifies that I'm aware of is the SUI tax. I don't even think, for example, James, I haven't seen it, but I don't think like the Birmingham occupational tax would qualify.
Yeah, there's several jurisdictions throughout the country, or a lot, that have some kind of employer level tax. The law itself said, state taxes, that the employer pays. It's pretty much been clarified, or it's only been talked about with respect to unemployment. So if there's other types of state and local taxes assessed on the employer, I'm not 100% sure if those count outside of SUI.
Yeah. Here's a question. How do you apply FTE to salaried employees and physicians that do not work any certain hours? I think probably if they're working a full-time schedule and you consider them full-time, I would consider them one FTE. If you have someone less than that, either you're going to calculate their FTE count based on the 40-hour rule, or use the simplified method and say they're half an employee. I know that's very common in the medical profession for the hours to be different. Let's see.
I had a question about how do you determine the initial FTE count? There's really like 5 different periods that you've got to measure FTEs, unfortunately. Maybe 6 if you're a seasonal employer. So the first reference period is February 15th to June 30th of 2019. So you'll calculate your FTEs on that date. The second reference period is January and February of 2020. You'll calculate your FTEs on that date. You get to choose whether it's February to June or January and February that you use. So the lower amount is the one that you're going to use as your reference period. Then the 8-week PPP period is the third calculation of FTEs, and you'll compare that to your reference period, either February to June or January and February. If it's more than that, you can stop there. You don't really have to calculate it any other times. If you're low during the 8-week period, then you're going to look at June 30th, whatever FTEs you had, on June 30th, or I think it says the pay period that includes June 30th. So if that's paid, on July 15th or whenever it's paid, you'll look at how many FTEs did you have in that June 30th period, and you'll compare that to February 15th. So if you were low during the 8 weeks compared to before all this happened, but you restored it by June 30th to at least where you were on February 15th, it looks like you're fine. There's another measurement period last year, or the reference period. If you're a seasonal employer, you can use, I don't know the exact language, but you can use any 12-week period between certain dates last year, like maybe January and September or February and September. If you're a seasonal employer, to establish, what's your reference period for 2019. I know that's a lot, but, I think the best thing to do would be look at the 8 weeks. Are we high or low compared to last year or compared to January and February? And then look at June 30th compared to February 15th. Let's see. We had a couple of questions, or a question about overseas. Rent, employees don't count. I don't know if they specifically said if rent or utilities overseas is specifically excluded. Mike or Nicole?
I would assume it's not. They seem to be pretty focused on American soil activity and employees. So I know they've not specifically addressed it though, but I would not hope for it. What do you think, Mike?
I definitely think that you're probably going to find that nothing overseas counts, employees or expenses. Because the whole purpose of this was to keep people here employed. And I know specifically they addressed the employee issue, but I'm like James, I haven't seen anything on the other.
So we've got one question about if an employee received a bonus in the first quarter and they don't receive that bonus in the second quarter, does that mean they had a 25% wage reduction if that bonus was so large that, I don't think so. I don't know that I've seen anything specifically written that says you only look at base pay, but I don't think that's going to count against you. Nicole, have you seen? Okay.
I wouldn't think it would count. A lot of companies do give bonuses in the first quarter for the prior year performance.
Mhm.
So I would imagine they wouldn't hold it against you. Mike, I'm sorry.
Yeah, I think it would be the base pay.
Yeah, so here's a really good question about if they extend the 8 weeks, how does that 15 through 85 limit? Some employees might hit that 15 through 85 in 8 weeks. Other employees won't hit that 15 through 85 until 12 weeks. I think you're correct that, you might get 8 weeks of pay for some employees and 12 weeks of pay for some employees just until they hit 15 through 85. That's at least, that's the way I see it right now, but I could envision 100 different ways they could write those rules.
But the other thing, James, that I would say is just mathematically is the application itself was based on 2.5 months of payroll. So the other thing I would say is they may not top out until 12 weeks, but if you get to the 8 weeks and you meet the forgiveness using all the things combined, it may not matter.
Yeah, I mean, I could see a scenario there where they would say, the extension from 12 weeks to 16 weeks, only counts for employees that weren't employed during, the first 8 weeks or that weren't there for a full 8 weeks, and still limit it to 8 weeks for each employee. I mean, I have not actually seen a draft of any of these bills that they're talking about. My suspicion is they're changing, as we speak or voting, sometime today from what I heard. But like I said, there's a lot of different ways they could rewrite that. I think it's safe to assume you'll still be limited to 15 through 85 per employee, but will they let you have 12 weeks for one or 16 weeks for another one? Let's say it's a $50,000 employee, then you could have 16 weeks before they hit that. But I don't know that, with any certainty right now.
Here's one, the question is, my loan was received by my holding company. Payroll is done through 3 separate wholly owned operating entities, pay bi-weekly, every other week. How complicated do I need to make my payroll calculation?
So if you've got payroll reported under 3 separate federal ID numbers, I haven't, Nicole, have you seen any come through? Like, in this case, he's saying that the holding company applied for the loan, not each subsidiary. I have
Right.
not.
That was a source of confusion during the application process. My belief, and y'all may disagree with me, was that if the company that was writing the checks for the payroll, who was running the payroll through their taxpayer ID number, would apply for those employees who were being paid out of that corporate entity, except for if you had like employee leasing, a PEO type situation. So the structure of the application is throwing me off a little bit for the holding company to have been the one to apply, but I would, when I do the forgiveness application, I would just be sure to line up each taxpayer ID number with the payroll and do a summary narrative to explain what you did and why. What do y'all think?
Yeah, I think since the holding company applied, that's going to be the entity that seeks the forgiveness. And I think you just want to explain that and have all the documentation.
Right, but I think that the calculation will have to be every bit as complicated as if you had done all three separately.
Yes.
And I don't know what you would have to do differently once you put them all together. I think if the holding company applied for it, then all the FTE counts apply at the holding company level. All the calculations apply at the holding company level. I just have not seen any specific guidance for a holding company that applied on behalf of its subsidiaries. Even if they're wholly owned subsidiaries that maybe even get consolidated for tax purposes, I just have not seen any specific guidance on that question.
And if one thing I have seen some calculations for an employer that had a couple of hundred employees, this is really complicated because you not only do you have to do the FTE counts, but if you're in a position where you have done a lot of salary reductions or you have a lot of people over $100,000, it's really a significant undertaking to do all this. Here's a question: can you pay owner health insurance premiums with PPP funds? I think the answer to that is no. We know that it doesn't qualify on self-employed individuals, but James and I had a little bit of a disagreement on this, and that the forgiveness application itself, while they have a section to enter that for employees, they do not have any lines to enter the benefits for owners.
Yeah, I think based on the interim final rule, if you're self-employed or a partner in a partnership, that seems to be exactly the case. If you're an S Corp owner or a C Corp, it's not entirely clear. You could make an argument based on the way that they wrote it, that as long as those are what you paid last year and you haven't increased that just out of the blue because of the PPP money, those might be eligible. I would really like for them to come out and just say point blank, exactly what they mean when it comes to owners. I certainly understand the confusion on it, and I'm sorry that the answer is not straightforward. But I think if you're a C or S Corp owner, you've got a chance as long as it's something that you've done before. And if you're in a partner in a partnership or self-employed, then that's a pretty clear no.
Let's see, we got a couple more in here. We're getting close to the end of our hour. Here's an interesting one. Can you claim a warranty that was purchased for a server as an eligible expense? I do not believe so. I don't think that follows, is considered a utility. I would assume that to be more of a service.
We had a good question about, what if you're dividing your staff and some of them are working some days,
Right.
are working other days. How do you calculate your FTE counts? They work 50 hours one week and 0 hours the next week.
James, I'll go out on a limb and say that we have our group split into A and B, and they're either working physically in the office or working at home. And we're doing the same thing in that we're trying to stay below 50%. I would say that if that's your full-time schedule, I would probably count them as an FTE now.
Yeah, I think it might matter. Are they getting, if they're hourly employees, and are they getting paid for working on a full-time basis, even if they're not able to come into the office? I mean, I firmly believe, and they've actually clarified that if someone is furloughed or not actually working, but you're paying them, they count as if they were on site and working. So if you're paying these employees the same as if they were working full-time before all this rescheduling happened, then I think they count as a full-time equivalent. If you're only paying them on an hourly basis and they're working 50 hours every 2 weeks, then I think they would say that's part-time. I'm pretty sure and there is also another question about an FTE template. We do have FTE templates. We have not put them out there yet just because everything is changing so much. That's the reason we haven't put out a new template for the 8 weeks. Every few days now or every week, it all changes. But I believe the way it's written, you're supposed to look at your employees over the 8 weeks as a whole and get their average number of hours. So if they work 50 hours every 2 weeks, that would be 200 hours in 8 weeks. That's 25 hours a week. Just the way it's written, that would fall into the part-time bucket if you're only paying them for those 50 hours. There's another, question about FTEs. It hasn't been asked, but, if you use this alternate FTE method for half an employee, if they're part-time, what if an employee works 1 or 2 hours every week? I mean, and maybe they worked 30 hours last year and they were part-time, but they're only working 5 hours this year. Well, under the alternate method, that's half an FTE in both years, even though they're clearly working far less. So I think you're going to want to look at, and that actually might be the best answer to the question about if they're working every other day. If they were part-time last year and they're part-time this year, then they're half an FTE if you use that alternate method in both years, and you don't have to worry about did their hours get significantly reduced. If you do the 40-hour method, then if you reduce people's hours, that does count against you in the FTE.
Let's see, we'll take a couple more.
Did you all see the question about if I don't use the whole loan amount?
I did not see. Which one was that?
Is that the first one? If I don't
Yes.
use the entire loan amount,
Yes.
how's the 75% payroll figure?
I mean, I haven't thought on it. I think it's still going to be figured on the whole loan amount, but since you didn't use it all, you'll still have that money there for the unforgivable part to just pay it back. Does that make sense?
I would agree with you.
There's a question about how is the 75% payroll figured? Is it on what you spent or is it on the total loan? The way they wrote this application, just mathematically, it's not really what I was expecting when they wrote it. But you take your payroll cost, which includes health insurance and benefits and payroll, at least payroll subject to the 15 through 85 limit, and you divide that by 75%. So again, if it's $75,000, that works out to be $100,000 of total forgiveness. So that means your maximum forgiveness is whatever it would have been, to come up with your payroll being 75% of that number. So I'm not sure if that's the best way to answer that question. But again, if your loan is for 120 and you spend 75 on payroll, then the maximum forgiveness is 100. You just lose $20,000 of forgiveness because there's no way you didn't spend 75% of the 120 on payroll.
Let's see, we're about out of time. Y'all want to look and pick one more question?
Let's see, there's a question on mortgage, non-mortgage debt. Says specifically on loans and lines of credit. I'm pretty sure the answer is it's got to be secured by property, by personal or real property.
I think
That's a consistent. Yes.
I would say a line of credit secured by, unsecured or secured by AR or inventory. I just don't know if that's what they're intending. I think a truck loan, or an equipment loan, yes.
Here's another one saying, asking about would expenses of licenses and wireless leases, could they be claimed? On the licenses, I would say no. On the wireless lease, I'm not sure exactly what that is. But on the licenses, I would say no.
Well, it's got to be real or personal property. So intangible property leases, even software, I just don't know that that counts. But if it's hardware or personal property or real property, that type of lease will count. So then the question is, what if you know, we're talking about all this full-time and part-time and eight weeks and every other week, but what if we just get everybody back to regular hours by June 30th? Will it all be okay? That answer is probably yes, but you need to make sure everyone that's back by June 30th is the same everyone that was there before all this happened, you know, in February, for example. So if you're everyone that comes back on June 30th, short of February, then no, you're still short. Wireless service for tablets used by company technicians, is that a utility? Probably, well, yes, actually, I mean, it's telephone or internet. It's probably billed with your Verizon. They have not specifically said cell phones or cellular internet counts the same as a utility. I think it does, but would love to see that question answered.
All right, I think that's it. We appreciate everyone attending. We're going to edit this and put it out on YouTube. We'll post that link on our website. So if you have someone who wasn't able to see this, if you want to pass it along. I had someone email me yesterday and say they were going to attend this one and when will we do another one? And I guess the answer to that is we'll probably wait a few weeks and get some more guidance. I have a feeling, though, they may pass this legislation on the 16 or 24 weeks, but the people who are passing the legislation are really not into the details. So how long is it going to take for all that to filter out and the SBA to come up with guidance based on what we've seen? My guess, Nicole, would be it could be several weeks.
I agree.
So we'll just keep track of it, and next time we feel like we have enough information to give you an update, that's what we'll do. Well, thank you again for joining us, and if you have any questions or comments, just email them to us and we'll be happy to help you. Thanks.
Thank you, everyone.
Thank you.